All right, we have enough participants. We can just begin. I'll just give a quick background. I hope everyone's safe right now and more importantly, vaccinated in these times. The whole idea of what we do this every month is to give you a first cut experience of what Strata is all about, and ask you and answer any questions which you may have for that matter. Before we get started, I want to give you a little background about, how is India's money spread. We as Indians today are upwards of $5 trillion in wealth. We are not a 5 trillion economy, but our wealth is surpassing that. Most of the wealth is parked into gold diamond, which is very evident, especially the tier 2, tier 3. Predominant chunk of the money is parked into these two asset classes. Second is FDs and bonds. Third is residential real estate. When I speak about residential real estate, this is that part of the money which is going for an investment, which is not where you own a house and you buy another house. That is called an investment. Otherwise, the house you own is called end consumption, and that is not considered as a part of the wealth where India is parking their money as such. Good chunk, 15% equity, and I'm sure this has increased in the last 6 months to a year because of the whole pandemic and the amount of retail participation we have seen in equities as such. But still, you're talking about less than 2% of India still participating into the stock market of India. Insurance, mutual fund, AIFs. So if you see, a majority chunk of India's wealth is parked into safe asset classes, which means where very important parameter for us as Indians has been that, hey, I want my capital to be safe. And that's what is important. But, with such low risks, what comes is lower returns at the same time. Like today, FD is giving about 4%, 4.5%, 5% at max in terms of return, subject to, can go up to 5.5%, subject to, how long you're parking your money. Gold is a different asset class for us as Indians per se. It's more a rainy day kind of an asset class that if in case something goes wrong, we go out and liquidate that whenever we require at the same time. Residential, which is a huge chunk, surprisingly, is also giving returns of about 2 to 3% kind of returns in terms of rental return. And you can't expect longevity of tenants being in your properties because of the whole low cost of interest, which is nowadays there for residential. It's as low as 6.5%. It just makes sense for someone to go and pick up a house instead of paying rentals unless he's looking at a short-term duration as such. So, which is what we wanted to bring about a change in the entire thing. Focus on safety of capital, paramount number one, which can have a long-term value appreciation and can be a great asset class where we can invest. Like one thing we've realized that we in passive income, like rental income and like interest income, and we wanted to mix and club both of them and give to investors as such. Commercial real estate is one such asset classes. I'm sure many of you have invested in or own commercial real estate as such. But commercial real estate is one such asset class which we want to focus on and bring about to a normal retail investor. And I will tell you about how we do about as we speak. But in terms of performance, it has been the top two asset classes in terms of performance over the years, which is great. What numbers you're seeing is rent plus appreciation again. So all these years, if you see in comparison, whether it's gold, residential, etc., this has been very, very resilient and has been consistently given great returns to investors. Now, what all covers as a part of CRE? Office spaces. Many of you all might have doubts with respect to, hey, because of pandemic, things can change, etc., at the same time. However, that is not an asset class which has been resilient, especially because of the pandemic. There are already RFQs rolled out by foreign companies for 2023, 2024, 2025 demand, which people have to start constructing for them to get access to that kind of demand later on, right? So there is a thing, but more importantly, because of the whole work from home, as much as people think it's not being sustainable in a big way, and people are resuming offices. In fact, people in the US have started resuming office or will be starting to resume office. Like Apple made announcement, Google made announcements of opening offices where people can start, entering and start resuming offices. But in India, for that matter, our rents have been very, very cheap. We're still a $1, $2 rental market per month per square feet, which is substantially lower to how it is, say, in Manhattan, in Australia, in London, in other parts of the world. The kind of people and the salaries at which we get, it's half, 1/3, 1/4 of what they would get for a similar person in the US. So because of pandemic, I think offshoring of work is going to happen even more a bigger way. We're no longer only a BPO center. We are now GICs. We have global innovation centers of large companies over here. whether it's Fiat, it's Pepsi, bunch of other companies who recently opened a lot of their GICs in Hyderabad and in Bangalore. We'll continuously keep seeing. So we are now becoming a product-driven, product innovation nation as well, apart from just a BPO, what we used to earlier be used to call as such. So because of the number of people, and if these companies in the US, in the West, who are looking at cutting costs because of pandemic for that matter, what comes more important to them is let's start offshoring more, which is why I think we are at the cusp of a massive real estate hockey stick growth from a commercial real estate standpoint. And which is why, it's great for us to bring about such opportunities to investors. Warehousing and industrial is one such opportunity as well. You would have seen in the last 1 year, e-commerce adoption for us, normal people have become very, very high. I mean, people are ordering everything to big baskets for that matter, which is now a Tata's company, and multiple other things where adoption has been very, very high, and so is industrial. We are a consumption country, and with the whole movement of China to India, as much as you might hear in paper, it is happening in reality. There are multiple companies who have come and started setting shops in India as we speak at the same time. So, there's going to be a great boom. And that's again a part of the real estate, which is very critical. Retail is one such sector which will always thrive no matter what. I mean, in spite of the whole e-commerce adoption for that matter, even in US, retail is still upwards of 50%, 60% of the total sales. E-commerce is only 20-25%. And the rest are other small mom and pop wholesale stores, etc. for that matter. But then retail is one such thing which we are very bullish about, that this will continuously keep growing and keep thriving at the same time. Not that we've done any retail asset yet, but we're proactively looking at picking up retail assets as we keep going forward. And data centers one, which is a new kind of an asset class, which we are exploring, and hopefully we'll bring something soon to our platform as well. So how is CRE? It's a $1 billion industry in India, driven only by the ultra HNIs, for that matter, or the large funds. Retail investors do not have, a great opportunity for them to invest. I'm talking about retail who has about 50 lakhs to a crore. He does not get a grade A opportunity. He does not get a tenant like an Accenture. He does not get a tenant like an Amazon, etc. So that is what we are trying to solve and trying to bring. Real estate is obviously, CRE is far better than a residential. Commercial real estate gives returns in the range of 4 to 8%. I'm sorry, in the range of 8 to 9%, whereas residential gives you about 2 to 3%. So you're almost 4 to 5 times better than what a residential can give. And CRE for people's mindset has always been only office, unfortunately. But there's a whole lot of asset classes which I just told you about, which one can invest. Even a hospital asset, for that matter, is a phenomenal asset class which one can invest. So CRE, in comparison to residential stock, etc., higher returns. Like I said, 8 to 9 is just the rental return. An average appreciation conservatively is about 3 to 5% and can go as high as 7 to 8% as well. Property to property is subject to different things. Let's say a metro coming outside your property, etc., where they can see a massive spike in appreciation, but it does not happen beyond that, unlike certain exceptional cases as such. CRE is very stable, especially even during these times. It's been a very, very stable asset class for that matter. Many people are thinking that people have given up offices, etc. I can give you an example, like a large IT company in Bangalore, which has about 45 lakh square feet of office, has not given a single space yet, and they are convinced to stick around for at least 3 more years before they decide to give away any space, because you need to understand, getting a 45 lakh square feet campus is not an easy task for them. Second, their employees are staying around, their children are having schools around, etc., etc. So it's because of a 1 year, 2 year small window for that matter. These guys come with the mindset of an investment of 5 to 10 years bare minimum. A 1 or 2 year is not going to make any differences. But yes, if they had demand of increasing their capacity by another, say, 10 lakh square feet for the next 3 years, that would get reduced to 5 lakh because of certain hybrid work from home which can happen. But what is there existing has remained. The smaller companies have definitely tried to reduce their costs by letting go certain offices, but we're very clear, because of the culture issues, not having great work environments, etc., people would get back to offices at the same time. So that is why it is gold, great asset class, but again, it's volatile. You have seen, especially in the last 1 year, how volatile it has been. Returns have also been a little lower in comparison, but year on year, 7 to 8% CAGR gold has been given to investors for the last 40, 50 years. So it's a great asset class, but how much can one own beyond a point of time? So why CRE is not mainstream? High capital requirement is one classic reason. Single floor of a large office park, for that matter. For people in Bangalore, let me take UB City as an example. A floor of UB City comes nothing less than 50-60 crores. It's a lot of money for one to park. And in investments world, that is the thumb rule we talk, right? That, hey, you should diversify your investments. But unfortunately, real estate does not offer diversification as well, right? Second, owning a floor which is 50-60 crores, for that matter, is a lot of money. Sometimes for certain people, it's not just lifetime savings, it's lifetime earnings, which is required to be parked into one asset. And it's a massive concentrated exposure in one asset class itself. Need for expertise is very important. Understanding everything with respect to CRE, at what price, what is the benchmarking, the legalities around it, the terms of the lease, how to lease, what to lease, monetizing maximum out of your property, for that matter. Like for instance, one of our properties which we own, we're now trying to install solar on top of our roofs and trying to monetize more and generate more returns for our investors. Now these are smaller things which investors typically don't understand or don't know, because people who are investing in real estate are not experts. Majority of them, they are just parking disposable incomes that their core, so that they can go back to their core business where they generate that money and parking into that. Tenant and asset management in today's time, that is the most important, especially for all our properties, for that matter. We've received 100% rent till date. Again, it's purely because of the kind of tenant relationships we maintain, and it's very critical in these times to ensure you have great relationship and you keep managing your property and keep taking care of whatever they require from time to time. Like I said, data is one big aspect which people don't know. Even when you buy residential apartments, for that matter, people don't know, okay, what price did my neighbor buy? Even if you ask him, he's not going to give you the right price. But that gap of data is very, very important, and which we try to predict, and I'll show you what we do, how we do it at the same time. And lack of liquidity is also a big issue. Selling a 40-50 crore asset is not an easy task in today's world, and that is the biggest gap, because assets in the range of 20 crores to about 300 crores is too large for an HNI and is too small for a large fund. So this is the only ultra HNI bracket where assets are being circulated amongst each other, for that matter. But then that is where we come in as Strata and try to bring and bridge and make a very disorganized market a very organized market at the same time. So that is what we do. We are a tech-enabled investment platform. End-to-end investment, what you're doing is entirely online and digital, which is very, very different from what people's perception about real estate is. That they have to sign multiple documents, they have to go to the registrar's office, stand all day, take care of everything. We've changed the entire gamut of investing itself in CRE, where you can stay at home, you can holiday wherever, and whenever there's an opportunity live on a platform, you can decide to invest after evaluating everything before you invest into any property. So we have about 10,000 plus investors today who have signed up on our platform. Upwards of 1,000 have invested. We manage about 330 crores in AUM, where we do private sale as well as the smaller ticket size, which is the fractional investment through our platform at the same time. So the minimum ticket size for an investor is 25 lakhs. Any opportunity which you get, you are given all that data about the property, and I'll just show you an example of a particular property, what we do. It's data driven, so you get access to that data before you decide to invest. You can keep tracking your performance from time to time, and whenever you're looking at liquidating, you can even look at liquidating at the same time. We assist you in terms of liquidating your assets as well. But more importantly, entire end-to-end management is handled on your behalf. So for you, it's all about clicking a button, deciding if this is an opportunity you would want to invest in, and everything else is managed on your behalf from our end. Very important question which people ask, okay, how do you choose your properties? So a very strict parameter goes with respect to choosing any property for us. Location advantage is definitely one very important. The kind of specifications, what is the kind of vacancy this building has or this micro market has, what are the rents going around in the market. Rents might differ if it's an old property versus a new property, for that matter, but that is very, very important for us to evaluate and then enter into any opportunity for the same time. What are the kind of tenants? The gentry of tenants are also very important for you to evaluate before you invest, because you don't want a property where all the other tenants are grade B tenants and you are stuck for that matter, because you'll never be able to get a grade A tenant for yourself. Second is due diligence. So we do a very, very detailed due diligence for every property. But good thing about these grade A assets typically is when a grade A developer is building, he uses the best of best law firms to acquire. Any developer would get some bank to lend them. So the bank does another set of due diligence. Then comes the tenant. A grade A tenant will put his lawyers and do his due diligence before investing a good chunk of money in fit outs and other things into the property. And then we come in. So 4 layers of due diligence is already conducted before an asset comes to you, on the platform. In-depth financial analysis is very important. Like I said, we have data. So we evaluate to see, okay, what are the prices going around in the entire market year on year? How have things grown? What is the vacancy, like I told you? But very important, the tenant, who we are taking, we even check the financial status of the tenant, because end of the day, it's very critical to see, does the tenant have the money to keep paying us on a month-on-month basis, right? So that is something which is very important, because property, whether let's say people in Bangalore, an Embassy or a Prestige or a Brigade, they're all the same for that matter, right? But what is important is the kind of tenant profile which one is able to attract, and the kind of tenants which are there, and their ability to keep paying you rent. So that is very important. We do have an investment committee which approves every property before we list onto a platform, so that there is a whole lot of rationale and thesis around why we would like to go ahead behind this particular property. We share that thesis to you all as well during any opportunity, but we have professionals who do this, and then the property gets listed onto the platform. Your process is simple. Whenever there's a listing of any asset, obviously you get access to all the documents of the property where you can go and review anything you want to. Once you do your KYC on a platform, you can sign an expression of interest and transfer your initial token advance. It's typically in the range of 5 to 10%, subject to property. Once the property is 100% funded, we notify you and give you 14-day window where you can transfer the balance 90% or 95%, again, subject to what we decide property to property. You transfer it. In the event if you don't, we give opportunity to the waitlist persons who can come in and participate. This is a first come first serve opportunity at any given point of time. So we cannot unfortunately wait, because we make certain commitments to the seller or to the developer, and we want to ensure we meet those things for that matter. Entire structure is done through SPV, and I'll take you guys through what. So we float a special purpose vehicle which will acquire the asset, and then we keep managing the assets and keep distributing monthly rents to the investors. Explaining the structure for that matter. So you as investors, once you do your KYC and you have access to these opportunities, you create, once your KYC is done, a virtual account gets created for you. You transfer money to the virtual account. That virtual account is linked to a common escrow account which we have created. We have trustees. One of the SEBI registered trustee as our escrow account agents and trustees for that matter. So the money gets parked over there. Once the property is 100% funded, is when we move the money to the SPV. And SPV is a private limited company, or it's called a special purpose vehicle, which will own the asset. So the UDS of the asset, entire 100% ownership of the asset will be in the name of the SPV, and you are the 100% owner of the property, of the SPV, which owns the asset as such. Why we do this? It's the institutional way of doing. All the large funds, etc., across, or large developers, all float SPVs and do it. If you ever have an opportunity, just go to MCA's website and search Embassy, and you'll find some 70-80 companies of Embassy, which are all one properties or SPVs which have been owned, so that whenever they want to sell, just transfer the shares and you can sell. There's a good amount of stamp duty savings and a bunch of other things why people like this institutional structure. So we're trying to bring that institutional structure to retail investments as well, so that it becomes a very seamless experience for investors at the same time. And us as Strata, we keep managing the assets on your behalf, whether it's rent collection, rent distribution, tenant management. If the tenant leaves, identifying a new tenant, helping you sell the asset, etc., is what we handle. So there's a whole lot of dashboard which is provided to you, where you can track your investments, your TDS certificates, you can track the valuation reports, etc. I'll just show you so that you get a fair glimpse of an idea. This is one of our properties which we had invested. So I'm just showing you Strata's dashboard itself at the same time. So you can open multiple family accounts for yourself. You can do HUF, individuals. Trust is not something which we are accepting at the moment, but you can open, so that even as a head of the family or somebody who wants to manage everything through one login ID password, you can do it at the same time. Very simple. Accordingly, you can choose the data, whose data you want to see, what is happening at the same time. Again, all your investments, you can see what earnings you've got, where are your investments are, etc. If there's any ongoing investment, if you have signed up, it'll pop up on your platform as well. All your transactions are available, whether it's buy, sell, rent transactions, etc. all available for you to review on a real-time basis, whether it's the rent report or the TDS certificates, etc. They're all there. Like how much money did the company receive? What was the interest on security deposit? So the security deposit which we get from the tenants, we even park that in FDs and pass that interest also to you on a month-on-month basis. We deduct a small management fee, and I'll show you what we do in terms of our charges. Deduct TDS, and we make the balance payment to you. So that's what we do, and you get these monthly rent receipts for that matter. Again, your rent reports, you'll be having very soon an ability to download these rent reports for that matter, and you can do your income tax filing very easily. All your investment documents, whether it's your share certificates for your investment, we issue two type of securities to you for your investment. What do you make? 10% goes as equity and 90% goes as CCD. CCD stands for compulsory convertible debentures. They come with a coupon rate. So whatever rents we get, pro rata to that coupon rate is determined. So whatever money comes is distributed to you on a month-on-month basis. So at the SPV level, there's nothing left. It's a no profit, no loss organization, just claiming depreciation year on year and nothing beyond that. So even your share certificates are maintained on your dashboard whenever you want to review at any given point of time. You can check your share certificates, whether it's your CCD certificate, this is the CCD certificate, or your equity certificate along with the stamping, etc., is all available on your dashboard whenever you want to review at the same time. So we made the system in such a way, making entire real estate experience absolutely as digital as possible, whether it's your property documents, lease deed, land title report, which you obtain from a legal opinion, etc., all made available for you to review whenever you want to. And the SPV, which is going to own the document, which is going to own the asset, all those details are also made available on the dashboard for you to review whenever you want to. Property analytics is one thing which I want to show you guys, and I told you, right, data is very critical for us. For warehousing, we just take valuation reports. We are yet to update the valuation report for this particular asset, but I'll just give you an idea about what kind of data we sit on. I'll just take Bangalore as an example. Just pick up one of the marquee properties in Bangalore. One second. I'm just taking the World Trade Center, which is in Orion Mall in Yashwantpur. So when I told you data, so we have data of floor by floor, area by area, how much got leased, how much is unleased, when is lease expiring, what was the building average rent in 2018, 19, 2020, 2021 is 128. Very critical for us to know how many clients have signed up a 3 to 5 year, how many clients have signed up 1 to 3 year kind of leases, and who are the top occupiers, whose lease is expiring when. So 4.9 lakh square feet of lease is expiring now. So it's critical for us to see if they are renewing the leases, how much rent discounts have happened, etc., before we decide to invest. So these are things which we do floor by floor, data for every property. We have any property, you name it, sale, lease, loan, mortgage transaction. It's driven by PropStack. They're one of our investors in our platform. And this gives us that edge to ensure we select the right assets and keep updating this on a real-time basis for you, so that you can keep a track of on real-time basis. For people, again, I'm just taking Whitefield as an example. How much square foot was there? How much square foot is there today? How have the rentals been? 44 was the rents, 54 is the rentals now. So it's critical for investors to evaluate that if you're getting a property, let's say for 30 bucks rent, you should be careful, because when the entire market is at 54 rupees, why is somebody getting paid 30? Or if another instance, if someone is charging 70, 75 rupees for that matter, you have to be careful again. If the entire market is at 54, why is someone paying 70, 75 bucks at the same time, right? So it's critical to ensure the rents do not have a huge disparity. If they do have a huge disparity, one, if the rent is lower, definitely the building has issues. That's why they're not able to lease the asset for a larger price. Or the building price is high, then that could be a good chance that the fit outs have been done by the landlord and the rents are very well. So, or the building might be brand new, or metro might be coming. So let's look into these parameters before you decide to invest. And that is what, we proactively share all that data to you before you decide to invest as well. So the kind of services we provide, on a normal given day, we would love to do property tours. We had done that for one of our assets, but we've stopped because of pandemic. We take care of lease negotiation, tenancy management, asset upkeep, for that matter, so that there's a asset management update which keeps coming to you as well from time to time. A half-yearly valuation report, we've tied up with one of the largest IPCs. It's a Fortune 500 companies with whom we are working, where we give you access to the valuation reports and the asset sale negotiations. Whenever you want us to sell, we negotiate on your behalf and get you the best price. Again, you have access to what the price is, so that there's no disparity at the price we can sell. There's all transparency available for you, and the dashboard where you can keep tracking on a real-time basis everything. The most common asked question is, okay, how do I liquidate my properties? So this is, or real estate in general is a platform or a kind of an asset class that if you have less than 5-year mindset, is definitely not recommended to invest even 1 rupee into this. Same way with us as well. In commercial real estate, if you have a investment horizon less than 3 to 5 years, definitely not recommended for you to invest. This is not an asset class which can double your money in a year's time or 2 years time. Maximum appreciation is in the range of 3 to 10%. For that matter, there are very, very less chances where you can make upwards of 10% in terms of appreciation today. Because we're talking about completed assets, tenanted out to the best of tenants. You can't expect something beyond that unless, some new major announcement of, say, metro or this road becoming a 4-lane road instead of a 2-lane road, a bunch of other things. But irrespectively, do not expect appreciations, beyond 10% at any given point of time. So holding on to your investments for at least 3 to 5 years is bare minimum recommended. So if you don't have an investment horizon less than that, more than that, not recommended to invest in Strata or any kind of real estate product for that matter. We have a resale platform. You have a small 6 months lock-in. After that, you get access to the resale platform whenever you want to sell. You can put it up over there. We call up, verify, and then put it up over there so that tomorrow when there's a buyer, we do not want a reason why you change your mind if the price has been offered. So we take those consents. So hence, we don't want unwanted people coming up and just putting resale and then decide to change their mind as such. We have a dedicated resale window as well, which we open every year for 2 weeks. This is very critical, where investors who are looking at liquidating can take a small discount on their investment and can liquidate. And for those people who are looking at acquiring, can look at acquiring. So this is a two-week window open for investors who are looking at liquidating certain opportunities. And for those who already own it, probably to own more, or others who like to own a particular property can own more. So we have a wait list on all our assets. So this becomes an opportunity for them to enter into certain opportunities. Again, real estate is a timing business, so it's always critical for us to do that. And private transactions, if you have somebody else who you want to sell it to, you're always free. There are 2-3 investors for whom we have done it in the past at the same time. So you can always do it. Again, to your investor or to your friend, family, whoever it is for that matter who's coming, he will be aware of what the valuation of the asset is with respect to the third-party valuation certificates, etc. And then he decides to invest. So we don't want a situation where someone is investing 25 lakhs and wants to sell it for 50 lakhs, where the property value is probably say only 30 lakhs for that matter. So to avoid such transactions, we try to build more transparency so that people are aware of the price, and if somebody still wants to pay 50 lakhs, then that's their call at the end of the day. So who can invest? Anyone and everyone, whether you're an Indian, NRI, HUF, LLP, partnership, everybody can invest. We are not accepting money only from foreign citizens at the moment. We're working on something, and we would start accepting foreign citizen investments 2 quarters from now. And we don't accept money from trusts. Rest, any kind of company structure, organization structure is free to invest onto our platform at the same time. So just summarizing the kind of key investment terms which we are able to generate for you from time to time. Minimum is 25 lakhs for all our properties. The recommended time frame for investment is 3 to 5 years, bare minimum. Again, reiterating that if you have an investment horizon less than that, not recommended at all to invest with Strata or in any other real estate product in general. Average rental return, which you can expect generating out of the platform, is about 8 to 12%. Again, property to property, if it's a warehouse, it's a retail, etc., things may differ. And the kind of IRR, which is rent plus appreciation, you can expect in the range of 10 to 18%. At the same time, that is what one can expect conservatively out of his investments for that matter. Now, in investments made by NRIs, very important. The time of investment, so no RBI approval is required for you to invest. If you're an NRI, you can invest from the NRE or NRO account, but we transfer rents only to your NRO account. So it's very critical that you have an NRO account at the same time. No permission required for you to sell your assets as well. You can freely sell whenever you want to, so you don't have to worry about any kind of restrictions again. However, if you give us your tax residency certificate, and subject to our DTAA, which is Double Taxation Avoidance Agreement, which India has with your respective country where you're from, the TDS would differ. So accordingly, we can do. Otherwise, the TDS is standard. What is prescribed by income tax is what we would do. And again, for you, it's completely online. You don't have to come here or invest. So we have almost 20% of our investors today who are NRI investors. So it's a complete online application for them, nothing which is offline, where they might have to go do anything for that matter. And even your dedicated investment managers are available on phone, WhatsApp, Google Meet, Zoom, etc. whenever you want. Tax is very important for to understand what kind of taxation is chargeable. So all the rental income which comes, we pay it as interest on CCDs. So it comes as income from other sources for you, and we deduct 10% TDS and we remit the money to you. So you can file your income tax refund and claim if you're not in those respective tax brackets. However, for those investors who can give us their Form 15G we certificate from them, we will stop deducting TDS for them at the same time. So many investors diversify their investments across their family members who are not in certain tax brackets. So, they can take benefit of not having TDS deducted at the same time. For NRIs, it's subject to, again, the tax rate, but we have a withholding of 30% plus surcharge for that matter. That's what we do. But subject to the DTA and your tax residency, we can reduce your TDS percentage. Even the security deposit interests, which we get, same taxes again at your hands. And proceeds from sale, whenever you sell for that matter, Indians can take a benefit of 20% as flat LTCG after the sale of 24 months. But more importantly, you can take indexation benefit. Indexation benefit is what the CII is, which is the cost of inflation index, which every year the government of India prescribes. So it's critical for you to evaluate that and then charge. Typically, it's in the range of 4 to 5%. So any appreciation made year on year at 4 to 5%, you don't pay any taxes. So net becomes a very, very tax efficient for investors, especially during sale. There might be very, very low or marginal tax at the same time. For NRIs, it's flat 10%, which you would be paying as LTCG, and you cannot take LTCG. You cannot take indexation benefits. And in the event if you are selling less before 2 years, then the STCG, short-term capital gains, is applicable, which is subject to your tax bracket, which you will fall under at the same time. I'll just give you an illustrative example of one of the properties so that you get an example of how the math works with respect to IRRs, taxes, capital gains, etc. at the same time. So this is one of the properties which we had done in Financial District in Hyderabad. I'm just giving you the breakup. We acquired for 46 crores. If you're an investor who says, I want to invest 1 crore, this is the kind of an Excel sheet which is provided to you. You can decide, I want to stay for 5 years. Automatically, the IRR, etc. gets calculated. If you say, I want to stay for 8 years, automatically the IRR gets calculated at the same time. What is not in our control is the early appreciation. It can be any amount, which is why we give a growth sensitivity, which is 5, 7, 8, 10, 11, 12%. We provide that to investors so that they can take a call because that is something which is not in our control at the same time. But imagine if you say 5% is what I presume, you don't pay capital gains tax purely because you can take the indexation benefit itself. However, if you are able to achieve 6%, then automatically the capital gains is made available where you sold for 1 crore, 59 lakhs for your 1 crore investment. Your tax is only 2 lakh rupees, 2,32,000, right? So you see net out of a 59 lakh rupee gain, 2 lakh is what is the tax you'll be paying. So from a percentage standpoint, you're talking about less than 3-4% at max, which you'll be paying as taxes at these kind of rates. Again, all these things are subject to TDS. So we deduct TDSs and we make your payments. So that's the kind of rental returns which you would be generating on a year-on-year basis out of your investment, and the IRR is calculated. So that's how we prepare. It's a standard format which we use at the same time for our investors. I'll just give you a glimpse of one of the opportunities which we did, again, the Financial District, so that you're aware. All the webinars which we do and conduct at the same time, all the investment highlights for that matter, how is office space been, what has been the growth and what is projected as a growth standpoint as well. What is demand? What is the key demand drivers for office spaces, especially despite COVID? How much square feet got leased? 80 lakh square feet got leased out by large giants in the last. They're trying to monetize and trying to make the most of taking their office spaces because they are aware they would want to go back to offices at the same time. Location, give you a good glimpse of Hyderabad, where all is the most of the square feet of office space. So if you see clearly, everything is in the PBD West, which is the peripheral business district, which is high-tech city, Kokapet, Gachibowli, etc., is where the entire thing is. Recent news about Hyderabad, or if there's a Bombay or there's a Pune property, etc., we share you all that information so that you're well aware of what location overview, how far is it from the airport, station, hotels, schools, colleges, who are the tenants close by, is this a great market where I can invest? What is the kind of vacancy in this property? The latest lease transaction, like I said, we have access to that data. So we try to show you as much as possible latest lease transactions. How has the rental trends been? Rental trends has been growing 6% CAGR at the same time. So it's very critical for us to understand that, what is the kind of capital appreciation we can make out of our investment at the same time. What rent we get, pro rata is the capital value of the property. So hence it's very critical to evaluate the rentals of the property at any point. I give you an example. When the market rent is 54, and if you are taking a property at 30, you need to be very careful, because you might think, as a naive investor, you might think, oh, I might make a flip side because I'll be able to lease the property for 54. You need to understand, if they've not been able to, for that matter, there is a clear reason why, you should be careful. And likewise, if it's at 70, when the market is at 54, and if you're buying, let's say, an 8% capital value, it's going to take you a lot of time for you to ensure, because the market will take time for it to reach from 54 to 70, and then you'll start making capital appreciation. So please be careful before you decide to invest in any of these assets, for that matter. Again, asset description, who are the tenants in the entire building, who's the developer, the floor plan, images of the asset for that matter, who's the tenant, etc., SEZ, terms, financials, how's the rental return looking like for the entire lease duration, the entire investment breakup. I showed you the financial model, growth sensitivities at different growth sensitivities, what is the kind of target return you can make out of your investments at the same time, and just the investment thesis, what is what, etc. So this is what we show to our investors, so that you can take a call before you decide to invest. One more thing I forgot to show, you get access to this Google folder as well, so that in case you want to, before you invest, if you want to read through any document for that matter, whether it's a legal opinion report which we have obtained from a law firm, all made available. Jess Sagar Associates was our lawyers for this particular property. So you can review those documents before you decide to invest. So the idea is to make it a very transparent platform where you decide, you review everything, question us whenever you want to, and then decide to invest. We get asked a common question: how are you different from a REIT versus what we do? So it's a classic example of an HDFC stock versus a mutual fund which is investing into HDFC. Why are you investing in a mutual fund when you can buy the HDFC stock directly at the same time, right? So multiple things. In a REIT, authorities with the fund manager, they decide where they want to invest. They can even invest into under construction projects. A REIT has solar assets, hotel assets, etc., which is a cyclical business and has a lot of risk which associated with certain government regulations. Like solar assets have seen a decline in rents which the government is paying at the same time. So it's very critical. In our model, you decide which property you want to select, the tenant, everything, and then you decide. Duration, REITs, I think, is more advisable for someone who's looking at a short-term investment and wants exposure in real estate. This is clearly a medium to long-term kind of an investment for that matter. Stock market volatility is a very, very important point. REITs have been a very, very, because they are in the stock market, it's a very, very volatile market. Many REITs have taken as high as even 70-80% and has fallen down drastically. At the same time, in our case, for that matter, these are real assets, backed by your investments, backed by real assets. So it's traditional in general, which means you will not see so much volatility, stability of monthly rental, and a long-term value appreciation can be driven at the same time. Distribution of proceeds, REITs distribute only 90% to investors after any debt repayments. Most of the REITs in India have not given more than 4-5% in returns because they have massive debts on their books, which they're looking at repaying through the profits at the same time, and balance left over is what comes to you. In our model, entire rent is distributed to you after the management fee, which we charge at the same time. REITs also charge a management fee on their investment, so there's nothing big difference in respect to that. And monitoring the investments, you can obviously monitor by their annual valuation reports, but here you can real-time value, track your investments, see monthly reports, monthly rents, valuation report which we obtain for you, half yearly, etc., is all available at the same time. Just to give you an example of Embassy REIT, by far the best performing REIT, if you ask me, in terms of market, but still one of the REITs which listed at 319 is trading today. I mean, at least by the end of April, they were trading at about 312, right? You do not see real estate, which is the only underlying asset in the REIT, has jumped so much. The highest it has gone to is about 518 rupees for that matter. So in a year's time, did the real estate, which was say 10,000 per square feet, did it become 20,000? It did not. So it is very, very different from an asset class standpoint to what, a normal traditional real estate can be at the same time. Very important to understand risks of the investment before you invest onto our platform or in any kind of commercial real estate for that matter. Loss of capital as a risk, the risk is low because good amount of due diligence, etc., has already been done. You're investing into a pre-leased asset. So if there is rental income coming from day one of your investments or after the rent-free period, as the case may be, property to property, and the ownership is there of an underlying asset at the same time. So you don't have a chance of losing capital at any given point of time. Lack of liquidity, medium. Strata, unlike a normal case where you bought a 50 crore asset, is difficult. Here you're talking about small investments of 25, 50 lakhs, a crore, 2 crore, etc. So liquidity would be relatively easier. But if you don't have an investment horizon of 3 to 5 years, not a platform for you to invest at all for that matter. We work towards creating multiple liquidity events, and as we keep growing, we'll continue to keep thriving on creating that. But that is something which we'll do. So we are not solving for liquidity in a big way to what one expects for that matter, but we're creating a far more liquid platform than the traditional liquid platform. Risk associated with real estate purchase, at least from a due diligence standpoint, we do as much as due diligence before we evaluate and buy any property. We do all the data assessment at the same time. So we know the price at which we're acquiring. Is it at market price? Is it at discount, or is it at a premium? If you're buying at a premium, why are we buying? What is the rationale around it? So we do all that assessment and provide that information in the deck which I just showed you. So that is one that way. So risk associated with this is going to be very, very low at the same time. Tenant leaving the property, medium again. We typically take properties which have a 3 to 5 year kind of a minimum lock-in. Otherwise, we don't enter into any property. It's very critical, especially in these times, to not take up any property which is less than a low lock-in. The tenant profile is very important. You don't want a tenant where the tenant is, say, an education company for that matter, because it has its own risks associated with that at the same time, because the tenant might not leave, might not pay you rents, students creating any issue, etc., etc. at the same time. But tenants can leave, but it's our job to identify a new tenant and ensure we take those kind of properties where leasing will be comparatively easier at the same time. Because that's our job, and we proactively look into that on your behalf. Just our AUM. So we manage about 330 crore in AUM. As a matter of fact, like I said, upwards of close to 1,000 investors have invested on our platform till date. We recently closed a 64 crore asset in Hosur. It was an industrial asset. Prior to that, we had closed a couple of other warehousing. We did the financial district opportunity, Express Zone, which was a property in Bombay, Randox, which was again a sale and leaseback of a cold storage facility which we own, and a couple of assets which we are managing through our platform as such. So just about us. So I come from a real estate law background. Been into private equity for about 9 years prior to joining Strata. We're proud of what we have achieved at Strata for the last 1 year, 1.5 years rather. Ever since we started our business and operations. Like I said, we manage close to 330 crores in AUM right now. Priyanka is my co-founder, comes again from financial modeling and real estate background. She was the first employee of the real estate department at WeWork. Tremendous amount of exposure with the kind of properties WeWork acquired and the kind of analysis and modeling which she could do. Nihar is our director of investments, looks after any queries you have, or you want it to be escalated for that matter, or you have any queries about any properties, if and why, etc. Nihar is the person. I'm there. We do our webinars for every property, but otherwise offline, if you want to connect, Nihar is your person. Praveen leads acquisitions for us. All the properties which are acquired, Praveen leads that department, and Ankit is our head of marketing in our company. So a diversified team of about 40-45 people from different organizations today, and trying to scale this up very proactively at the same time. So we've been backed by certain prominent investors. Elevation is a $3 billion fund. Early investors of Paytm, Swiggy, Unacademy, Just Dial, ClearTax, No Broker, PropTigerHousing.com, etc. Likewise, Mayfield and PropStack, I gave you access to, showed you a little glimpse of the data which we sit and the kind of analysis we bring on your behalf for that matter. We bank with HDFC Bank. Custodians, we're moving to another trusteeship companies where all your share certificates, property documents, etc. are maintained. Our escrow partners are ICICI Bank for everything. All the investments you make and the rents which we pay, we route it through Razorpay, so that you can track with the UTR number on a month-on-month basis at the same time. So that's about it. Happy to take questions from everybody. You can put your question answers, in the question answer tab, and I'll happily answer all your questions. Great. We have questions from Mr. Syed. Does Strata own any of the plots? Like example, the warehouse which is built in Hosur, who owns the land and the plot over there? So we don't own anything. We are a platform, except for one opportunity where we had invested for that matter. We have decided not to invest in any properties because it's a conflict of interest. We don't want to take calls only for our behalf. We want to work for the investors at the same time. We are a clear-cut platform. So we don't own, but you as investors will be the owning the land, the plots, etc. in the event, let's say a warehousing asset where the land is owned and the building will be owned by you. When I say you, it's going to be the SPV which is going to be owning the asset. You would be the owner of the company which is going to own the asset. So that is how it's going to be. We have a question: if there's any appreciation on the land, does the shareholder benefit or earnings restrict on rentals and its rental appreciation? No, absolutely not. I mean, it doesn't make sense if you're investing only for rental or rental appreciation. Value appreciation is also something which you would have access to, and you would get it. So whenever we liquidate the property for that matter, we transfer shares. The premium for that is going to be your returns which you would generate for yourself at the same time. We have a question: can the investment be designed in a manner which is Sharia compliant with the help of investment team at Strata? So we got a Sharia audit, and we can be a Sharia audit platform as such. We've been working with an agency to get the Sharia certification as well. We should get that very, very soon, and we can start. So the only advice we've got is to change the security deposit which we get in terms of FDs. We need to park it into, say, a Tata Ethical Fund or multiple other things, and we become a Sharia compliant product. But we haven't got the certificate yet. We just started working, but last year we did an audit and we figured that this can be a Sharia compliant product. So we can go ahead and get this done very, very soon for you all at the same time. Great. I think your next question is: you told SD security deposit money is put in FDs. Can I, investor, decide where I can put my fraction of investment in a mutual fund or in small case choice, risk bearing, or the same? So at the SPV level, we decide whether to, and we put all the money is in FDs because security deposit is a liability and we have to repay that money back to the investors. So we don't want to keep it. But all the returns which you get, you're free to put wherever you want to, whether you in mutual funds or anything else for that matter. Like I said, once we get our Sharia certification, we will start moving everything to a Tata Ethical Fund, which will ensure that this becomes a 100% Sharia compliant product at the same time. We have a question from Sri Shanti. Can we visit the site? Ma'am, for any of our properties for that matter, once you own, you are free to go. Obviously, we don't want to disturb the tenants, so we do not allow investors to go inside. Or we would be conducting site visits yearly once, so that investors, if they want to come and see their properties for that matter, they are free to come interact with the tenants. So till probably things don't stabilize for that matter, we are not doing this. But you're free to go for that matter, see whenever you want, whatever you want for that matter. But we are not going to organize for at least for the next 3 to 6 months before things stabilize from a COVID standpoint. We have a question from Mr. Mohan. What are the typical terms around the convertibles you issue, price at which it converts, etc.? So we issue everything at face value. So 10 rupees or 100 rupees, whatever the face value it is. It has a lifetime of 10 years. Post that, you can convert those CCDs for that matter. So for the 10 years, we continue paying rents on a month-on-month basis. So that's how the convertible terms are put in. But in the event, if there's anybody who wants to convert before, for that matter, all the investors have to give their go ahead, and then we can invest and confirm it. We have a question from Mr. Arun. It's good that investor has access to the transparent data and information, but who verifies the data related to legal titles, etc.? So we verify on your behalf, and whether it is the due diligence report which we get from Jaisagar Associates or Cyrilla Merchant or Argus, there are 3 independent law firms with whom we work. We give you access to the legal opinion report as well, so you can verify the legal title, who owns it, by the seller from whom we are buying. You will get that title opinion before you decide to invest. So all that information is in your hands before you decide to invest into any opportunity with us. So we will give you access to the legal opinion before we list any opportunity on a platform, before we even take 1 rupee from you into any of our opportunities. So people who have invested now have a flavor of how we work. But as a new investor, it is 100% recommended that you please go through all the documents once before you feel comfortable investing even 1 rupee with us, because we want you to be prudent. Ask us any questions. We are always there to answer any questions on your for you, and then we would invest. So we have 2 similar questions. When is your next property coming, and what are the current opportunities? So we're not having any property open at the moment. All our properties are 100% funded, and investors are getting their respective rents. We are listing a new asset in the next 15 days to 3 weeks. We are doing due diligence. Once we get the clearance, we would list the asset onto the platform. We have a question from Spurti. Is the lease agreement already signed with Wakefit for the Avigna Phase 2? What happens if Wakefit will underperform in next 3 years and decides to exit? See, so in that particular property, we have a 5-year lock-in, 10-year lease. There's no question of them quitting the property before 5 years. The lease is right now only an agreement to lease, which is registered. We have verified those documents for that matter. We will be registering the asset right after the lease is registered. So until then, we would not. Right now, we've only done an agreement to sale. Because of the pandemic, we could not register the asset. We've done an agreement to sale and transferred certain amount of money so that we have control over the land, and the opportunities doesn't slip out of our hands, which is why we've done it. But right after the lockdown lifts, which I presume is 14th as of today, the registered lease would be registered. We will share that document, and then we will register the land and execute the construction agreement at the same time. So net, we're waiting for another week before all these things should be clear as such. It was unfortunate that we were supposed to register the asset on Monday, and Saturday the lockdown came into picture for that matter. But anyway, things are in control. We are in constant touch with the tenant as well. We would be sharing, if you are an investor of that asset, on Monday, we would be sharing you certain images of the machinery of the tenant, which has already arrived at the property, because there are 2 boxes which the tenant is taking. We own both. Our investors who own the other box, we've already informed them. So once the machinery is inside the facilities, we will show you so that you get an idea of the commitment from the tenant side, because these are crores of rupees of machineries which are coming in, which have been imported and are arriving on Monday. So it's 2 days from now, and probably in the week, whenever we get access to where we can go, we'll click images and share it to you all so that you can take care of it. We have a question from Mr. Anmol. Why minimum is 25 lakhs? Any chance of reducing the ticket size? So we are keeping 25 lakhs because a company cannot have more than 200 shareholders. And if you look at a 50 crore asset, we don't want a situation where we are not able to. We have to open 2 SPVs for that matter. Let's say in our Wakefit, we had to do 2 SPVs and we had to invest for that matter. But then typical 25 lakhs is kept is more to ensure we get more mature investors on our platform as well. Over a period of time, we might reduce it, but at the moment, we want to ensure that the investors who are coming up come with that kind of maturity, because real estate is not for all, and it has to be done only for those investors who bring with that experience, maturity, and the risk appetite as well. We have a question from Mr. Sandeep. How many properties do you plan to take at a time? How many per year do we expect? So this year, we anticipate to close about 1,200 crores in AUM. That is what it is. Pandemic delayed our ambitions by a month. May we couldn't do any asset because many of our investors, our team members, etc., were either down with COVID or much of other things. But we are back. Everyone's vaccinated in our organization, and I'm hoping most of our investors are as well. So that's when we would be wanting to bring on board. So you can expect every 30 to 45 days, there would be one opportunity which we would be listing onto a platform. But there can be opportunities where we can even do 2 parallel assets, something which we would be working very, very soon at the same time. We have a question again. Why do you see, by when do you see Sharia certificate process to be completed, and when do you see Sharia products to be made available? Any tentative dates? So I'm hoping in the next 2 to 3 months at max, we should have that reviewing multiple things. They've given a couple of advices as well. So we'll have to change certain documentation and agreements. But once we get the certification, any product on the platform would be Sharia certified and would be Sharia compliant at the same time. So we're waiting to get that, and then you can start. So worst come worst, you can expect 2 more quarters, October, November, before which you can start investing if Sharia is an important aspect, and we respect that, and hence 2 more quarters at max you can expect with respect to things. We have a question from Mr. Arun Bhandari. Is in CRE negotiation is important? Are all prices in the platform are supposed to be considered final, or is there any scope? So we negotiate on your behalf. We give you a rationale around everything. We give you access to the sale lease transactions as well. So it's very critical for you to take a assessment with respect to, are you buying at a premium, are you buying at a discount, etc. at the same time. But we do the negotiation. We charge a performance fee, so it's important in our interest that we get you the best property at the best price, because if you're buying at a higher price, we don't make any performance fee on exit. So we charge a performance fee of 20% if you made a CAGR of 8% year on year. Most of the platforms or most of the funds in India charge on IRR, which is rent plus appreciation. You make anything beyond 8, they'll take 20%. We do not charge anything on the rents. We only charge if you made anything over and above 8% year on year in capital appreciation. We take 20%, which means, let's say you made 9% appreciation, then our fee is going to be about 0.2% only, right? So, but other platforms, other funds which are there in the business, which is what we are changing as a structure, they charge rent plus appreciation 20%. So imagine you made 8 plus 9, 17. They take 20% of anything over and above 8%. So that is a huge difference. And you as investors, there's so much more money instead of just paying fees for that matter, because you're taking the risks. You should be the one who should be rewarded, and not the fund manager for that matter, in a normal fund for that matter. Great. We have a question from Mr. Sandeep. The agreement amount is paid by Strata or to the seller. How is it done? Sorry, I don't know which agreement amount you're talking about, but most of the properties we give a small token advance to block the asset, so that tomorrow the seller does not change its mind, and we can file specific performance, etc. in the term sheet and ensure the asset comes to us. But once we collect the money, the SPV gets the money, and the SPV goes and buys the property. So Strata is not involved in anything at any given point of time. We have a question: how are ongoing costs such as maintenance, property tax handled? What happens when a shareholder doesn't pay up his share of property tax? So we solve for this through our platform very proactively. Whatever rents which you get is after maintenance, property tax, etc. So there's no question where a shareholder does not, because we control that, and this is very important to be taken. Even insurance for that matter. Many investors say don't take insurance, but it's very important, because tomorrow something happens. For a lakh or 2 lakh, why should we take such a big risk for that matter? We own 20-30 crore assets in terms of value. For 2-3 lakhs, why take such a big risk? In fact, we even take insurance on rent continuity. For 4 properties we have taken, for 3 we've not. That even if because of any fire, etc., if there is for 6 months, we still get rent paid by the insurance company. There's a rent continuity. Just costed us about 30,000 rupees more, but we've taken that for our investors, so that 30,000 doesn't make a difference, but even if we get this once, there's good amount of money which we can protect ourselves from such an uncertain event which can happen at the same time. We have a question from Mr. Arun Bhandari. Once purchased, can we make change in the building usage subject to regulatory approvals and fees paid? Absolutely, sir, without a doubt. In fact, we own one of the assets where we have a good 12-year lock-in, 15-year lease. The FSI available in that area is 2.5. FSI utilized is 0.4. So till 12 years, and we're making an 8.5-9% return anyway. And for 12 years, we'll make about 12-13% just rental returns, average out. We're very clear that once the property is, if you're looking at selling for that matter, or at the end of the lock-in or the lease duration, when we should demolish this property and utilize the entire FSI, because that's when maximizing of the capital value we can generate for our property can be done as well. So subject to regulatory approvals, rightly mentioned, we do, but we are not developers. We are a platform. We are wealth advisors, so we'll try to partner with somebody who can do it. There are many investors who approached us for doing certain partnerships with them, so we are always open to take care of these things. But absolutely yes, absolutely done. Anything where we can maximize maximum for you as investors, we'll not even think twice. Uh, we have a question from Mr. Ahmed Kumar. Do you have previous webinars of various properties recorded? Can we have access online? Yes, we can share it, y'all. No problem at all. Just write us at hello@strataprop, and this would be made available if it's not available on YouTube already. We have a question from Mr. Sandeep. You had discussed with me regarding a leverage partly loan product plan. Do you have any update on that? So we are exploring with the bank right now, where if you as an investor invest only 75%, upfront we will announce that 25% will be taken as loan. So there won't be any rent paid for you for X number of years, and it will be paid towards loan repayment, and then the balance will be owned by us, right? So we are creating a product because multiple investors have come and saying, hey, let's start leveraging it for that matter. We are working on that, and we would create, but in a normal property where there's no leverage, unless all the shareholders do not tell us that start leveraging and start taking any debt on the property, we will not take it. So it will be a property or a product which we will announce upfront that we are taking a leverage. Only then we will announce it. Otherwise, there won't be any leverage which would be taken on any property. Great. So I think I've answered all your queries. If you still have any questions, I'll be available for another minute. I'll answer any of your queries. In the event, if you still want, if you still have any further questions after this, you can feel free to either write to us at hello@strataprop.com, or once you've signed up, you would have access to your investment manager, and you can reach out to them, and they'll be very happy to answer any queries you may have. So yeah, that's about it from our end. Like I said, I'll just wait for another 30 seconds. If in case somebody has any questions, I'll happily answer anything more. I have a question from an investor. How do I book a call and know my investment manager? I'll just take a minute and show you our dashboard again. On your dashboard, whenever you sign up on your platform and you do your KYC, you will have something called as investment manager. Dean is one of our investment managers at the same time. So it's very simple for you to schedule a call. Let's say 7th, the time slots which would be available for Dean will be made available, where you can track and book any time slots you want. Select the property for which you want to call, reason, general investment, whatever mode of call. If you want it to be a Google Hangout, a face-to-face call, or a face-to-face meeting, obviously now we're not accepting face-to-face meetings, but in the event, or a telecall for that matter, you can book the slot and schedule it. Dean would be notified, and on that given point of time, either Dean can call you and do it, or at the same time you can reach out to him. But again, subject to the availability, he'll be able to block his calendar and set up a call with you. Just explaining you a little bit on what is virtual accounts as well. Just give me a minute. So the minute you do your KYC, there is a virtual account which gets created for you. This will be a unique bank account number, which is only for you at the same time, which is created. So, you transfer money, you add this as a beneficiary once on your bank, in your bank, and you transfer money to this particular bank account only for that matter. So this is a unique account which no two investors will ever access. And these unique accounts are linked, again, thanks to Razorpay for their innovation in this platform. That is linked to the escrow account where we distribute rents to you. Where you invest your money through our platform as such. Great. We have 2 more questions, and I'll end this session with everybody. We have a question from Srishanti. Is stamp duty and registration cost borne by the investor? Absolutely. When we give you, let's say, a 50 crore opportunity for that matter, it includes the money paid towards stamp duty, fee paid towards, say, Sarila Merchant Mangaldas for doing the legal work, or Jaisagar Associates for doing the legal work, any registration costs for that matter. All those things are factored in, and then the net rent which you get is what it is. Even the net rent which you get is after property tax, insurance, maintenance, etc., etc. So whatever we show you net is after all costs, and all the other costs are already inbuilt with respect to things, because that is something which somebody has to pay, and obviously you're buying the property, so you would be only paying the registration and stamp duty. We have a question from Mr. Syed. Can we have a recording of this available? So we do this every month. First Saturday of every month we have it. So at any point, if you want to attend your family to have a first-hand experience, they can do it. In fact, we got a couple of feedback to do this fortnightly. So we'll be working on that, so that if you want to attend, and get your friends, family, whoever who wants to attend this for that matter, can attend this fortnightly or monthly for that matter, which is right now. So that if they want to know this better than a recording, which can get a little boring, better they can come forward, ask their questions, and have a one-on-one with us through this platform itself. Great. So thank you so much, everyone, for joining in. I hope we've answered all your queries with respect to how Strata works and the platform. We'll be bringing an opportunity very soon. Most of the opportunities do get funded very fast. So try to understand what we do, how we do when there's no opportunity, so that when there's an opportunity, you decide whether you want to invest or you don't want to invest and move forward. So thank you so much, everyone. And I hope everyone stays safe and healthy, especially in these times. Thank you.